Yeah, there is one more data point that I want to touch on, and that already came out this morning, and it has to do with mortgage rates. They're moving higher again, and applications have really slumped. Overall demand has now fallen to a 28-year low for mortgage applications. So that is obviously quite significant that we're seeing here as we look at some of the housing data that we've been watching, Brad. And we have started to see mortgage rates, the 30-year fixed, you can see it increased to 6.7%. So it's not at 7 again, but it is going back towards 7% again. And that's really been a psychologically important level. Like if you're going to get a mortgage and you're staring down the barrel of that 7%, that might give you pause about whether you're going to be making that home purchase.
What's particularly interesting, too, is the number of home buyers that had flooded into the rental market as well, one where I sit handedly in, and perhaps many of our friends. And I think here in New York City, tracking this extremely closely, if there is some easing, at least in the home buying market, and for buyers to potentially start to nibble at or start to put in bids again, then one huge thing that we're also going to be tracking is the number of rent prices across the U.S. kind of economy right now that start to come down as well. And that's key to seeing where, in addition, at the same time, some of the supply is coming online for new buildings. And that was one of the reports that really caught my attention earlier on this week as we kicked off the week, was the fact that because of that supply that was coming online in the rental market, you're both seeing prices come down there. And then additionally, if you do see some of the pressures, at least in the home buying market, in terms of being priced out of the market, if you see that start to abate, then perhaps as well we could see some lessening of the pressure on a core necessity and just housing spend.
Right. Yeah, exactly.